Hello everyone, I'm Gian, founder of Banker Smith. We are developing a synthetic US dollar that's backed by delta neutral mechanism. It's great to see you in Istanbul actually, and I believe as a Turkish person, Istanbul is the best place to talk about stablecoins. Istanbul has been a commercial center and trade center for centuries, and it's not just the center for commerce and trade, but also has been a bridge between West and East for thousands of years. So I cannot think a better place than Istanbul to talk about stablecoins. Today's topic for this panel is role of stablecoins in emerging markets and hyperinflationary economies. So firstly, I'll ask our speakers to introduce themselves, and then we'll start discussing.
All right. Hi, guys. Thank you for having us. My name is Wayne Huang. I'm from Taiwan. And I really flew in just for today's event, 12-hour flight. I'm involved in two organizations. One is I'm co-founder and CEO to XREX. XREX is a stablecoin-focused fintech that provides cross-border payments as well as crypto trading for users in emerging markets, and especially for small, medium businesses. So we facilitate a lot of usage of stablecoin for people who absolutely are not in crypto, who don't understand crypto or blockchain, who are just brick and mortar businesses, textile, fishing, agriculture, manufacturing. So that's XREX. We are centralized, fully licensed. The Taiwanese government sits on our board, made a direct investment for good or bad, but I give credits to the government and also very large banks. We also started as a completely separate entity, a nonprofit organization called the Unitas Foundation, which operates the Unitas protocol. It's a DeFi protocol that mints out stablecoins pegged to emerging market currencies. Right now, we support the Indian rupee and the Vietnamese dong. These stablecoins are over-reserved 130% to 200% with US dollar stablecoins. So it's synthetic stablecoins reserved with US dollar, cash or cash equivalent, essentially, and minting out stablecoins for emerging markets, and especially suited for the Turkish lira, for example. So that's what we do.
Hey, I am Julian Nesk. I'm Argentinian, and I think I got some things to say about the use of stablecoins in hyperinflationary economies. Last month, we had 15% of inflation in a month. So I think the use of stablecoins there is being very useful. Then I'm currently working for Karpatki. We do financial services, mainly treasury management for DAOs. I'm working for Gnosis DAO at the moment, but we all work with ENS, Balancer, Cow DAO, and we're also in the treasury committee of Lido. So yeah, that's me.
Hello everyone, I'm Sinan Koç. I'm the founder of 1 lira, a Turkish lira-backed stablecoin, and we're also one of the largest market makers in the Turkish market.
Hi, my name is Richard. I'm a co-founder at International Stable Currency. International Stable Currency is essentially a hard money again. There was a gold standard 50 years ago in the US. But then since everyone has moved to fiat, we want to bring back hard money. But instead of just being gold, we're a basket of financial assets. So global stock, global bonds, short-term treasury, gold, and cash. We're pegged to that. So we're not just backed by that, so we're pegged to that. So the advantage for this is that if the user holds their token, they actually are no longer susceptible to inflation. This basket was optimized for stability instead of being optimized for return. We want to essentially first target DeFi user as like a good store of value. But at some point, we actually want to become like the currency of the world, like what comes after the US dollar, especially now that there's like mid to high inflation for US dollar. Nothing compared to the lira or peso, but still there's high inflation, and I think it's quite easy with crypto to actually make a hard currency again. Yeah.
Hey everyone, my name's Namik. I'm part of the strategic business development team at Consensus. A little bit about me. I'm Turkish Cypriot Azerbaijani. So, as some of you may know, Turkish Cyprus is one of the few countries that's not recognized by anyone except for Turkey. And Azerbaijan is a country, a developing market, where the pegged currency devalued 80% in the span of just a few months back in 2015. My background includes being a portfolio manager at a crypto prop trading firm, working as an investor at a crypto native venture fund, as well as just building like privacy infrastructure, because I think it's important. At Consensus, I focus on MetaMask and Linea. And yeah, stablecoins are top of mind at all moments. Just a few days ago, I went to the OTC desks in Turkey in the Grand Bazaar. And fun fact, there's over $100 million in volume today. By today, I mean daily. That goes through the Grand Bazaar, which is actually more than some exchanges in Turkey.
Thanks for the introduction. So, let's start with the discussion with the most obvious question. What are the use cases of stablecoins in emerging and hyperinflationary markets? Is it hedging, B2B, P2P transactions, store of value, or maybe all, or maybe something you want to add? Wayne, would you like to start?
Yeah, so we primarily facilitate cross-border businesses to use stablecoins. Today, it's mainly Tether's USDT as a way to access US dollar liquidity, right? These are Indian users. Taiwan is a manufacturing country, right? We manufacture so much stuff, smartphones, notebooks, but we don't want the Indian rupee for many reasons. We want the US dollar. And so for cross-border merchants, really they just need great US dollar liquidity. Now, it's super difficult to get a US dollar bank account in India. As individual, you basically have no chance, right? The RBI kind of prohibits this. So as an individual, you can't get a US dollar bank account. As a business, it's really hard. And official numbers, the Indian Central Bank, the Reserve Bank of India, past 9 years, they're able to supply 13% of the country's forex needs. The rest, 87%, well, you're on your own, so you have to go through informal channels. The government doesn't like you to call it the black market because that's how the country operates. It's informal channel or unorganized channel, right? Basically, merchants trading with each other. And so when they trade these offshore US dollar, it's also very hard for them to even have a US dollar bank account. You need to go and register, incorporate a company in Hong Kong, Dubai, or Singapore. And once you're incorporated, you hire a bookkeeper, you keep the books, and then you go to these banks. You have to buy some bad financial product, putting a lot of money, and then they'll give you a bank account. That's how you get US dollar access. But today, you have MetaMask, you have USDT, USDC, and you have great US dollar liquidity. Plus, then you have companies like us that help publicly listed companies understand stablecoins, help their auditors, usually a Big Four, to allow them to legally, in a fully compliant way, accept stablecoins as payment when they export to emerging markets. And so yeah, that's the main use case that we see today. And last year, a lot of public companies come to us, say, so many, when we export to Latin America, India, Africa, all the buyers now want to pay us in USDT. What's USDT like? We can't hold this on our books. Auditor says no, blah, blah. Right? We tell them, oh, you can do it. We're licensed through us. No, we're not going to use you. This year it come to us. We have to take USDT. They're buying from our competitors. How are our competitors doing it? Why are our competitors able to accept USDT and we're not? Okay, so we work with their auditors. So that's what we see happening today.
Yes, so Argentina is the country in the world outside of the US with the highest amount of physical US dollars in the world. And the reason is that, mainly inflation. But we don't like to have dollars in the banks because we have been screwed by them already. in 2001, the government converted automatically all US dollar deposits into pesos. And after that, the following day, devaluated the currency 70%. So basically seized 70% of the assets. Now, in stablecoins, you still need to pretty much trust the custodian, but it's a US custodian or a nation or wherever, but it's not Argentinian. We don't like Argentinian banks for sure. So, and also like people is actually buying and selling apartments on cash, anything. That's pretty inconvenient when you need to buy and carry like $500,000 in cash. It's not a very secure country. So stablecoins are actually providing solutions for end users that want to transact. Now, at the moment in Argentina, if you want to make a US dollar bank transfer, if you make more than one, the bank is going to call you and ask you, why do you want to make a transaction? That's not very convenient, right? So stablecoins are a way to elude all these government restrictions. We have, as I said, 15% monthly inflation rate. So you need to hedge against inflation. And you're not allowed to buy US dollar on the official market. You need to either carry cash and buy physical dollars. You can do some financial transactions, but then you get exposure to Argentinian bonds for 2 weeks, or you can buy a stable coin. And then you can hold a stable coin, you can get a crypto credit card, and you can spend your stable coins, and they are converted on the spot to Argentinian pesos. So you can get zero exposure to a very, very, very inflationary currency. So yeah, that's the use case, living.
Yeah, thanks, Julian.
So Turkey is the highest inflation country after Argentina, and this has been actually in the last couple of years. And one of the largest reasons is because the government's decision on the interest rate of Turkish lira, where while there was inflation all around the world and every central bank was increasing the interest rates, Turkey decided to lower them and go after a different model. So this caused Turkish lira to lose a lot of value in the past. But by law, you have to be paid with Turkish lira, and you have to pay your rent in Turkish lira, and you cannot spend dollars in this country. So we, as Bilira, work as a medium of exchange stablecoin rather than a store of value. And our goal is, once people get their salaries in Turkish lira, is to convert them into USD-denominated stablecoins or Bitcoin to move to a more store of value currency. And as the banks try to push the retail away from buying US dollars from the traditional market, today there's a 3% spread between buying and selling US dollars. And there's also a 20 bips tax on buying US dollars. And all of the reason for this is the government to try to push away people to get into dollars. But with stablecoins, there's a market being created where the spread between buying and selling is only 10 to 20 bips, and there's no tax on it. So this creates a deeper, more efficient market, and we have seen a lot of volume of people moving into stablecoin transactions rather than buying it from a bank. So we see this as growing a lot. And also, as regulation comes, being able to get interest rate to your Turkish lira stablecoin will be very important. And because in a high inflationary era, people need to get the yield to protect themselves, either by getting yield for that respective currency or moving into more stable coins like dollars or Bitcoin.
Yeah, I think the main point of stablecoin and crypto in general is to be able to go straight for the efficiency. And why is it more efficient? It's not because blockchain is a better computer than a normal PC. It's because it cannot be stopped by government. So it cannot, even if there's regulation, you have a choice to either comply with the regulation or not, or ignore it. And that allows for high efficiency. So they cannot impose a tax, and they cannot say, oh, if you want to do Forex, you need to go through that bank. No, you can do Forex against anyone. And that's really the power of crypto and stablecoin, essentially that okay, anyone can be an FX broker on chain. and that allows for a very, very strong efficiency. The government might want to stop it, but they can't, because that's the decentralized nature of crypto. And that will allow us to actually accelerate the economy, because now business don't need to worry about making sure that they comply with all the regulation. They just accept payment and send payment. So that's actually why it's easy to send USDT across borders, that you don't need to check all the box, all the regulation in order to do this. You just give me your address, I send you the money, you invoice me, and so on. It's backed in our court. But if I need to go to the bank, I send money to that. The bank is, who is this? It takes time. Their banks have their checks. Then they need to settle with the bigger banks in the US often. And that creates a lot of inefficiency. It's just a bunch of regulations stacked on top of each other. That creates this inefficiency. If there was no such regulation and the government did not care, we could actually use TradFi. The advantage of now moving to crypto, or a system based on crypto, especially powered by stablecoin, is that we will never have to go back to an inefficient system. Because if you start to be inefficient, there's going to be someone that will have a decentralized system that's going to be efficient, and they're always going to win now. Now the advantage of crypto also is that it allows to actually create better money, and that's actually where I see coming from. There's also the Bitcoin hypothesis that's like the ultimate gold standard. That's also possible thanks to crypto. But yeah, that's basically, I think, why stablecoin will win over time. For now, for like long distance transfer, because those are the hardest, but eventually also local transaction. As the wallet app get better and better. So yeah.
So I mean, I think a lot of really good points have been made. So I don't know how many more are left, but I'll try. Yeah, I mean, ultimately stablecoins blur the line between borders, right? And I think that's the real use case. That's the real value add. You are no longer beholden towards institutions of your nation, right? And that's a game changer. People mentioned on this panel, hey, in Argentina, I don't trust my bank. And that's not a one-off wonder, right? In Cyprus, on the Greek side, just a few years ago, as a result of the Greco crisis, if you had a lot of money in the bank, congratulations, you're now an equity holder in this bank, right? That's not what they signed up for, that's what they got. And many times you might be able to have US dollar as opposed to your denominated home currency. But if the bank / the custodian is going under, you are going under, right? And this is just a fundamental problem that the vast majority of the world faces. And the stablecoin successfully allows you to de-risk from your individual nation, right? Now, there are other issues of stablecoins. So like USDC, it's not exactly ultrasound in the way that it'll never be burnt, right? Or your USDC will always have value. That's not necessarily the case. But we are moving towards a world in which, USDT is adopted, right? In Turkey, USDT and Tron are the winners. So, we as an industry now have to be very, very cognizant of the fact that stablecoins are the largest aspect of our industry. That is where people have found a PMF, product market fit. Remittances are massive. And in general, I think that the way we need to find the way to get users to transact on Ethereum in a trustless manner, and stablecoins are the way to get there, right? Now, there's a lot of other problems that we have to figure out, but I think we're off to a pretty good start.
So there are tons of options in the market available for the stablecoins, but for some reason, only USDT and USDC have found product market fit and wide adoption. I'd like to ask you, why is this the case? What can be done to solve this problem for some? And is it possible? And what could be the new alternatives? Who would like to start?
I would say because they work.
Yeah, they work. But
There's
the others also work.
there's a network effect first,
Yeah.
and there's value add. I think those needs to be the differentiating factor. USDT, the value add is that you could settle between exchanges in crypto. So they got PMF very quickly. Like it was very hard for crypto exchange to get a USD bank account, and you need to transact with all your users. They all want to deposit USD and so on. So USDT became like, we will solve the bankings for you. Now just focus on your exchange. So they got instant market PMF. And then after that, they can start to establish a network effect. So that's going to be why it's very hard to break away from USDT. Why did USDC add some success and BUSD add some success? Is because they were value add. They were more trusted. They were more transparent. They were more regulated. That was the value add. I think if you start a currency and you also add this value add, and you might need to incentivize also, you might reach also a network effect. But until you reach a certain network effect, it's very hard for currency to be actually useful because nobody's willing to accept it.
Just want to hop on here. I think they're just diametrically opposed, and they're able to capture a large percentage of the market share as a result, right? USDT, you know, no one actually knows. Like, this might be a bit controversial, but it's definitely not as audited as USDC, right? I think most people can agree with that. But USDC, conversely, is ultimately like fully backed, and you know, it's ultrasound, it's very regulated. It is something that if will have the backing of the institutional system as much as anything has, right? And USDT is very much the antithesis for that. There's a reason why in a country like Turkey, people are actually afraid of USDC. They try and transact from USDT. I think that Brian Armstrong said something very interesting just a few months ago, like, would love to find a way to move away from the US dollar as the basis for these stablecoins. What does a crypto native stablecoin look like? What does it track? Pretty hard. That's something we haven't seen PMF in. And I think that's probably because the US dollar is the reserve currency of the world right now. So while the Turkish person might want to move towards the dollar because the Turkish lira isn't great, and everyone does, right? Even if right now the US dollar is printing like crazy, there is a lot of inflation in the US, because they are still the reserve currency, they're able to just do it and inflict the second order inflation pains on the rest of the world, right? And that's where you're actually seeing, ultimately, like a lot of people entered our space in 2020 because they said, yo, this is not okay. We need to have an alternative to US dollar. But it is still the standard. It is what we're looking for an alternative to. And that's why we don't have a non-USD pegged currency, stable coin really hit mainstream yet.
With USDT, I'll share my observations. Solvency is one thing, but for people to solve people's problems, you need great liquidity. Something that I don't know how Tether did it, but during the Terra Luna collapse, they were redeemed 17 billion in 30 days. And that was extremely difficult. Why? Because we work a lot with the intermediary banks. So when people redeem, you withdraw your bank deposit as a stablecoin issuer. You withdraw your bank deposit or you sell your T-bills. But then, immediately, you need to rely on the SWIFT banks to send out your dollar to those that need your dollar, to those that are getting out of your stablecoin into dollar redemption. To most issuers, banks will not even process 100 million a day for you. There is no way that they're going to do it. It breaks so many AML policies, and also because you're categorized as crypto money, many SWIFT banks just would not process your SWIFT transactions, right? So then, although you're solvent, it doesn't matter if you're solvent. Like we saw how USDC depecked when the 3S banks went down. They had the treasuries, they had the bank deposit. People did not care. People only care, I want to convert back to the US dollar the next minute. Can I get it or not? Yes or no? And if no, then I'm going to sell you cents on the dollar and you're going to depeck, right? So that plumbing is also very important as a stablecoin issuer because people need that. Your users need that. I don't know how Tether is able to do it, but provenly they did it. And so when you have that plumbing in place and you have some banks and some intermediary banks somehow are able to send money for you and you're able to provide your users with liquidity, then of course, you're going to be seen as a better stablecoin.
I thought about it last night when you mentioned this. I think it's because they all bank at Deltec, so they just do a in-account transfer. So that's what redeeming is. It's like they move probably from Tether.
Not exactly, because most users, they're not redeeming directly from Tether, right? So you need a network of secondary markets to help you process all that liquidity. Basically, anybody that wants to redeem USDT, you need to let them redeem ASAP without too much friction.
Right, ultimately, yeah.
Otherwise, they're just going to sell penny on the dollar. So.
Also to add on that, so in emerging countries, liquidity and availability is the most important thing. And the reason why Tether is a winner in the Turkish market is all about liquidity and not about trust or other stuff. And the main reason is that, for instance, with Tether, you can buy and sell $1 million worth with moving the price only 10 to 20 bips. But you move the same price for USDC or DAI with $50,000. And the reason why the Grand Bazaar has embraced Tether is because once a transaction happens in the Grand Bazaar, then that person hedges it on the crypto exchange markets between Turkish lira and Tether. So I would say for these USD stablecoins for entering emerging countries, liquidity is the most important thing, and the liquidity is segregated. So for every country that they're actually entering, they need to create and work with market makers to provide that liquidity.
Okay, so it's hard for anyone, any new stablecoin issuer to get a market share in the market. But right now, you probably have seen so far that there are new types of stablecoins popping up every day, and one of the most actually popular alternative is yield-bearing stablecoins, and also flat coins. So, do you think that 5% yield that most of the yield-bearing stablecoins give enough attractive to get market share? Do you think flat coins can be a real alternative to the existing alternatives because it's a very ambitious plan to do so? I'd like to hear your opinions on that. Who would like to start?
I mean, I'll go for it then, because I mean,
We
we're
were
a flat
waiting for
coin. So thank you for the question. I think that to go for T-bill or tokenized T-bill, it's obviously, in my opinion, it's just flat out better than the US dollar because it's as safe as the US dollar. Arguably, maybe even safer because it's not a bank deposit, it's an actual asset that the government owes you. As we found out with SVB and all the banks that failed, sometimes it's safer to just hold the asset. And then you get 5% at the moment on top of it. The issue with this is that you look historically, 5% is like in the last 20 years that didn't exist. So at the moment, it might be very popular. But then what happens in 2 or 3 years if the interest goes back to near zero? Then okay, what was the point of all of this? We made maybe total 15, 20% over 3 or 4 years of high interest rate. So that's kind of why we could have started ISC as okay, let's just peg to T-bill. It would be super easy. It always goes up. It doesn't go down. We decided, no, what would be a currency what would be in 50 years from now, 200 years from now? What's the ultimate basket that could represent a currency? And that's why we went for a very, very diversified basket of assets that would essentially perform well in 0% environment, perform well in a 20% rate environment. And that's truly also a better currency than US dollar. Just flat out, you're going to get no inflation thanks to that. But yeah, for now, T-bill just better than US dollar. They might get network effect a little bit, but then it's going to die down once it goes back to low interest. In my opinion.
Maybe the product distribution strategy will play an important role for that. For example, I'm not personally particularly sure about whether the 5% yield will be enough for someone living in emerging markets.
So a stable coin is not meant to be your investment for retirement,
Yeah.
right? Even ISC is like, we focus on stability first and not really return. You can have a much better portfolio for your retirement. Actually, anyone should invest for their retirement. They should not just sit on cash, even if it's US dollar. Just buy better assets for your retirement. So I don't think like T-bill or like T-bill stablecoin are necessarily like that's not the solution you're looking for if you want higher return. And it's fine to want higher return.
Nice. Anyone willing to take the
I
question?
want to add something on this as well. So I think having a yield-bearing USD stablecoin is still not enough to become the reserve currency of the world, even though the USD is the reserve currency today, is because during the COVID era, all the governments printed a lot of money. And the governments have the right to print money, and nothing stops them to increase the dollar supply by 50% this year. So that's why Bitcoin is trying to become the store of value, and actually Libra tried to create a new model where it was pegged with multiple different currencies and then maybe non-government store of values. And then the current governments went against it because they went after the government's power of printing money out of thin air. So I think in this new era, having a USD denominated yield stablecoin is not enough, but a new method needs to be tried with blockchain technology to create a new store value currency.
I feel that yield-bearing stablecoins are probably going to be very popular for at least a few years, and some of them can get really big market cap. But I also see a lot of risk. I'll explain. If I'm a bank, right, any bank in the world today is going to become the #1 most popular bank if the bank pushes out one product. I tell you, I have a demand account for you. This is cash account, demand account, or current account, or checkings account. Different countries have different names, right? This account, you can withdraw money anytime. I don't give you any restrictions. You can make remittance transactions, send your money anytime. You can debit your cards, your Visa cards against this account. I provide you maximum liquidity in this cash account or current account, okay? At the same time, I give you 4% yield. Okay. Then I'm the #1 bank, right? I defeat any other bank because any other bank is going to tell you, no. Your current account has 0 interest. It has maximum liquidity, no restrictions whatsoever, 0 interest. You want interest, put it in a savings account, put it in a timed account, whatever, right? Put it in a depository certificate. Then I maximize your yield for you, but there's going to be restrictions, right? Because we're doing maturity transformation in the underlying. And why no bank today has able to produce this product is because the risk is very hard to manage, okay? Why? Because, for example, if for people to have exposure to U.S. Treasury bills, we have Ondo Finance, we have Matrix for STBT, right? So tokenized T-bills. These are much easier products to manage risk. Why? Because for STBT, it's an investment instrument. It's not positioned and communicated to users as also a payment instrument. So I'm providing you tokenized T-bills as an investment instrument. Therefore, it's easy for me to also communicate to you that, by the way, though, global redemption, I have a throttle. We have a throttle, right? Every day, maximum 100 million redemptions. If over 100 million, please get in line. We have all the T-bills. Okay, and we cannot just sell our T-bills in one day because although they're 45 days, 90 days, we still lose a lot of money if we sell everything in one day. So it's an investment product, and there are some throttles, and it's easy to communicate that. And through that communication, that restriction, mitigate a lot of the risk for this investment instrument. But if I position the same thing as a yield-bearing stablecoin and I tell you, no, there's a throttle on your redemption or you got to hold the token for at least 30 days, whatever, you're not going to accept it because stablecoins to you is mostly a payment instrument.
right? So you're not going to accept any restrictions, so it's very hard for me to communicate that to you. At the same time, I attract so many holders of my token that are coming in because of a speculative motive, not because of a payment motive. They hold my token for what? For speculatives, for the yield, right? And as soon as the yield changes, they're going to dump my token because they were never using my token as a payment instrument in the first place. So we saw this firsthand with Terra Luna UST, right? UST would not have collapsed so quickly if it hadn't launched Anchor, right? So let's say UST, okay, nobody's really using it for payment. It doesn't have real world use. Okay, fine, then stay under a market cap of under 1 billion. Try to grow that usage. Try to grow that money velocity. But they didn't do that, right? They wanted a lot of holders, so they launched this Anchor 20% artificial yield, and all of a sudden they're like 16 billion in market cap. But they had no money velocity. Huge market cap, no money velocity, super dangerous. That is a speculative instrument. So as soon as the Anchor artificial yield went down, most people dumped UST, and that led to a big bank run, and they couldn't defend it, right? And by the way, Treasury bills is exactly the same thing as Anchor. It is not organic. It is not organic lending and borrowing from the world, within the world GDP. It is artificial by the US Fed, right? So if we launch that type of yield-bearing stablecoin based on T-bill yield, really the Fed, we're subject to the Fed. Whatever the Fed wants to do, the Fed.
If you're holding dollars, it's the same, right?
Yeah, but then we can launch tokenized T-bills, and I say it's an investment instrument, right? And I'm going to have these restrictions on you.
Whether I can say whether it's tokenized T-bills as a stable coin or as a real or as an asset, yield-bearing asset, I can say we'll find broad market fit on emerging markets because at least in Argentina it's not easy to access those, and I do think like 5% is relevant and significant for people. I have friends asking me like, hey, I'm getting this money. I may want to put something into crypto, but I also want to hold it, on hard money.
I agree, but if I'm offering this as a payment instrument, I'm creating liquidity for you. I'm creating fiat on fiat for you. Sorry, to maximize my safety, my stability, I'm not going to give you yield. So speculators, go hold tokenized T-bills. If I position as tokenized T-bills, I'm going to give you restrictions, also to maximize my stability.
So I think like we are running out of time. I'm not particularly sure about it, but let's make it the last question. So we know that like there is a market, there is a demand for stablecoins in the emerging market, but what should be done or what could be done for further adoption in terms of application side and regulation side, and also could be the non-USD local denominated stablecoins can grow in emerging markets?
Not in Argentina, not in inflationary economies. Like people is actually using stablecoins to get away from local currency. Mm-hmm. So why would anyone want to use a local stablecoin?
Maybe states ask you to do so. Like for example, in Turkey, it's not allowed to use USD for transactions.
Oh, but that's why we are using US dollar stablecoins.
Yeah, sure.
Like we're not using US dollar stablecoins because we want to use crypto. We are using US dollar stablecoins because we want to use dollars, and crypto is providing a solution to that, mm-hmm. which the traditional banking system do not.
I think Sinan
so to add on this, so emerging country stablecoins won't gain market share in AUM sense, but they will gain market share in volume sense. For instance, Bilira, it has a 200 mil TRY AUM, and usually the market makers hold it to give liquidity, but in a month there's a 10 billion Turkish lira volume happening with it. And usually that's a move from Turkish lira into Tether, USDC, or Bitcoin. So I agree that unless you can give a yield that beats the inflation, that gives a real value add to the currency, then by AUM, there's no way that the stablecoins can gain value.
But is it about the stablecoin or is it about the on-ramp and off-ramp service?
So emerging country stablecoins work as an on-ramp, off-ramp service.
Yes.
So that's the main utility of the emerging country stablecoins.
Yeah.
I think Richard is going to add something.
Yeah, I think so. Like, I think for every country, the local currency as a stable coin will act as a bridge between the better economy in crypto and the local economy that hasn't moved to crypto. Because we cannot expect that, okay, next year, we all pick a date and we all move to crypto economy. It's just not going to happen. We need a transition, and the local currency will, like the local stable coin will act as this transition. It's going to be easier to deal from by lira to lira for a local exchanger. But in the meantime, we can use USDT and use that as a bridge. Another thing that will allow to answer the question, what we need for crypto payment to really become a reality, we need better wallets. A better wallet that they're working on it, actually, like big adoption. But it needs to be as seamless as Visa and MasterCard. Like I can tap my Visa and MasterCard in a taxi in Turkey. I don't trust the guy, it doesn't matter. Like I'm not going to be defrauded by using credit card. We need to reach that stage for crypto, and we're so far away. Like, if you want to be a proper safe crypto user, you need to follow a guide of 25 steps. If you forget one of the steps, who knows if you're going to get rugged there. That needs to change to like just one step. You just tap, and then everything else, the security-wise aspect, is taken care of for you.
Yeah, there's a lot of very valuable insights. I think I want to talk about. I'll talk about like the MetaMask, like the role of the wallet in a moment. But I think that it's also important to just acknowledge the elephant in the room, which is there is a way that emerging markets will have stable coins, and that's CBDCs, right? In the end of the day, there's an insane amount of data that the government is able to utilize by having their own CBDCs, understand money flows, what is their average user doing, and then also the ability to maintain that oversight of revoking capital if someone acts inappropriately as determined by the government, right? So CBDCs will always be that elephant in the room, and you know that's why I'm happy there's stuff like B-Lira exists as like an alternative to like in the government system. But yeah, I mean, I definitely think that wallets are crucial when it comes to adoption of crypto, and particularly stable coins in emerging markets. And that becomes a game of localization, right? How can a wallet understand the stakeholders in this region as opposed to a different region and provide experiences that allow them to on-ramp, off-ramp seamlessly, but more so interface with the real world as much as possible, right? Like, you know, that's a large part of the reason why Consensus is in Istanbul, right? We have so many members of the team actively engaging with various stakeholders to figure out, hey, you know, this is clearly a market which needs crypto, has embraced crypto to an extent that most other places haven't, right? Banks and exchanges have a very friendly relationship in Turkey, right? This isn't necessarily the case in other places. And then the same with Korea, right? We were there just a few months ago for KBW. Hey, how do you localize a product and experience so that users are really, really empowered to interact on chain and, you know, ideally interact in real life using crypto primitives and crypto infrastructure? So yeah, I mean, wallets do need to get better, and yeah, we're working on it, and it's exciting.
I like that you bring up CBDC. I don't think CBDC will ever happen, because once you start messing up with the business model of banks, they will stop you. And what CBDC give access to is direct access to the local Fed, bypassing the bank. So as soon as there's a banking crisis, everyone will move to that kind of money because it's directly issued from the government. It's like paper money, which is much safer than bank deposit.
Also, CBDCs are M0s, right? Bank deposits M1s. Stablecoins are M2s.
Right,
They're
right.
very, very different.
But the CBDC will be like M0, so it's safer. So if there's a banking crisis, it will kill the banking sector. Therefore, you just need to, if CBDC are accessible by everyone, you just need to topple the.
They won't make it accessible.
Exactly. So that's why, like, let's not wait for CBDC to happen.
Not the majority of the money supply. I mean, money is not created by M0s. M0s in most economies like 10% of the money supply, right? The rest needs to be credit-based money created by banks and ones.
Right, but in order to create that money, it needs to be deposited in a bank. And if you give me access to M0 at scale with CBDC,
No, I'll give you access,
yeah.
but I'll control it to 10% of the money
So
supply,
it's
like paper cash.
My point is, like, CBDC for normal people will not happen because they will put limits as like, okay, you can only hold pretty much how much they allow you to hold in cash, which is like around $10,000. After that, start to be criminal a little bit. It's like, what are you doing with this much money? It's like, you need to explain it, and they assume like you did something wrong for some reason.
Yeah.
But yeah, if it's in a bank, it's okay for some reason.
Thank you very much for this insightful discussion, and thank you very much for listening us. I think we are end of our time, so I'd like to thank you all of them for listening us.
Thank you,
you.
guys.